Eric Muadit, Muadit.com, U.S. market analysis for the weekend of December 19th and December 20th, 2015. Take a look at the close on Friday. We see a down session, 2% down for the Dow, 1.5 down for the Nasdaq, 1.78 down for the S&P 500. Gold was up 1.5, and we see that crude oil ended the week on Friday down 1%. For the week, S&P 500 was down 0.34%. For the week, the Nasdaq was down 0.21%. And for the week, we see that the Dow was down 0.7%. So let's take a look at the charts. Let's begin by taking a look at the Nasdaq weekly, where we see the market give back all the gains for the week and managed to close down for the week. Not a good sign, especially if you consider that the market was moving its weekly RSI above 50. It failed to maintain that level. So that might be a sign that we are losing momentum here quickly, and also probably the threat of lower prices looms. But keep in mind, we just closed slightly under 50. So in the coming week, should the market decide to have some type of a recovery, anything above 50 might still record a nice gain. I think the key for this chart is this recent weekly closing low from the month of November. The level to watch there is 4927.88. As long as the market is moving below this recent close over the last couple of weeks, anything below that I think suggests that this market still has a lot of downside potential. Now if the market can recapture back above this level here, that might be the first step towards recovery. Otherwise, anything below that, this might suggest that we should not be too surprised if we see the market continue to drop week to week. Keep in mind, on the Nasdaq, we are seeing that the market is now back below the 10-week moving average and also back below the 33-week moving average. So staying below those moving averages sometimes can be a suggestion that the market is weak, because you can see when the market was in rally mode, like during this period here, the market held above the 10-week moving average and also above the 33-week moving average. So now we are looking at potentially the exact opposite, where the market is showing resistance at the 10-week moving average and also at the 33-week moving average. If we take a look at the Nasdaq Daily, just want to take a look at this from 2 points of view. So we had seen this resistance here. So there was initially coming into December, this was the line of support on the daily RSI that we were watching. And so the market did break below that during this period here. There was a slight break here for this drop. And what the market did was come back and test the same line. So if you extend the same line, you can see the market came and hit that level midweek and was showing resistance. So once we saw that, we were expecting the market to pull back because of that very simple line of resistance here. And so that definitely is, in my opinion, one of the reasons why the market is down. Now, if you want to shift this, you might start looking at this and say, okay, so the market is down the last 2 days, but maybe, just maybe, the market has a chance of moving higher. And let me explain. You can see that if you come back to this entry here off the lows, so off these lows here, the market did move up the RSI above this level, and so we can use that line from there to give us some information as to when the market is a buy on pullbacks. So you can see it touched the green line there for this entry and a market recovery. And right now, who knows, we might be forming a double bottom, and if that's the case, then surprise, surprise, this might be suggesting that the market is due for a swing trade to the upside. So even though we closed down, I'm not sure this is necessarily a sell signal in the market, because if it can find stability on this green line here, then that should be good enough to stage some type of a swing trade to the upside. Now that's one view. Let me show you another bullish view on the daily chart for the Nasdaq. Let's take a look at this level, this line. Somewhere, let's call it about somewhere there. Actually, the line is right. Let's draw it this way. And that connects the daily closing high there through this intraday high and the daily closing high there. And once the market moved above that, so let's draw a line from there, you can see that that entry after this nice here, this green line has been where the market has been finding support over the last 2 months. And so as long as we can hold above that green line, I think the market might actually manage to stabilize around here. So yes, the market closed down the last 2 days, but is it broken? For me, it needs to break this line for it to break, and it also needs to break this line on the RSI on the daily. And since we haven't seen the break, I think this is probably a good argument that if the market can hold above those two green lines, if it can hold here and hold above this line, the next swing trade in the market, surprise surprise, is gonna be to the upside. And yet if we break below the green line here and below this RSI support line, any break of that, then for sure the next swing trade is gonna be down. I think based on the way the market closed, I'll give the benefit of the doubt to the market bulls. Let's take a look at the Dow on a weekly chart, and we can see that the line we were watching previously when the market was trying to move higher, all these weeks here the market stalled to move above this level, and so the fact that we are down ever since is consistent with the resistance on the top side on a weekly chart, so that makes sense. We also see that that is consistent with our line that we had drawn on the weekly chart for the Dow. So the Dow had come back and was testing this line. Of course it failed, and after failing we can see it's down since then. So the level to watch short term in my opinion is this recent weekly closing low for the month of November. As long as the market is trading below that level, then the Dow Transports should continue moving lower. So the level to watch there for the Dow Transports is 17,245.42, and you can get these numbers in the description of the video. So anything below that and this market still should be seeing lower prices. And again, there's one thing here we need to not forget: the fact that the market was higher during the week only to give back all the gains and be down for the week. I think that's a big deal, and it's a big deal because we were moving above 50 and we failed to hold above 50. Whenever that happens, it means that the market is weak. So whenever you have a move above 50 but does not hold, generally that indicates that the move might not have been strong, or it indicates that the move was a fake. And so if that's the case, then one wonders whether the next move is lower. Now, one thing I wanted to share with you guys is this formation here on the MACD. So the main MACD had moved above zero, and I think the way it's shaping up, it looks like it might move back below zero. Because of that uniform action above zero and back below zero on the MACD, if that takes place, generally that tends to be a sell signal. So the MACDs are also indicating high odds that the market could be setting up to go lower in the coming weeks. Take a look at the Dow Daily, and coming into Thursday, some of us who had seen this chart here, resistance on this line here, once we saw that, we suspected the market could be down, and also there was a line connecting RSI highs. So both of those lines came in contact exactly at the highs of midweek, and after that this down move makes a lot of sense over the last 2 days. Now the magnitude of the drop is also not a surprise, because we moved below 50 on the daily RSI, so kind of makes sense actually. Now I want to show you why the daily charts are not as bad as the way the market seems after the last 2 days. Take a look at the Dow, and what I'm going to do is draw a straight line here. Now this line is critical because it gave us a nice entry in the market recently, so we can see a breakout above that line of resistance on the RSI, which began this move here, and since then the market has been high. So what we do is we extend the same line, and to me this can also be a very bullish chart because we've seen uniform activity support on the blue line, which is this low. We touched that line again here beginning of December for the slight low there, and over the last week or so we might be forming a double bottom. And if that's the case, then this is suggesting that the market could easily bounce. So yes, the last 2 days were down, but this daily chart might actually suggest that if the market holds here, it's a big if. But if the market holds, don't be too surprised if you see the market moving higher. So that's one view. Let me show you another view. The other view is from the fact that after this movement here in the RSI, the market moved from off the lows here, and we've had a nice move since then. So we take that level there, that entry, and draw a line from there, which should be somewhere around there. And again, you can see what I'm getting at here is, keep in mind this line happens to be just above 38.2 on the daily. So this line is important. And so support, and right now we might be forming a double bottom. Now, if this is confirmed as a double bottom, I can assure you the next swing trade for the market is going to have to be down. If the market is to go down, obviously it needs to break below the green line, and it also needs to break below this blue line. So it needs to be below those two lines if the market is to go down. Otherwise, support on either of those two lines might suggest that the next swing trade is to the upside. Let's take a look at the Dow Hourly. And again, the Dow Hourly, we have to be aware that the Dow Hourly is not bearish. So let me repeat that. The Dow Hourly is not bearish, and I'll explain why. Take the lows here, and the market has done well since then, which is this entry here. So we can draw the entry somewhere around there. So that slight RSI movement led to a nice move in the market. All right, market hasn't been back to these lows here. So we can draw a line from here, and you can see that the market has since gone on to use this as support line. You can see uniform activity below the green line and back above it. So once you move back above it with uniform action, that's a re-entry there. With uniform activity support on the green line for the lows there. Here the same thing for the lows here. And now we are back around that green line. And who knows, if the market can move back above the green line, then this is around here is where we start seeing the next push to the upside. Also, there's a slight positive divergence. You can see lower low in price on the hourly. While that is taking place, we can see a slight improvement in the RSI. In fact, this line goes back to middle of November, and this line is holding. So you can see that it suggests that if the market holds here with the RSI improving as prices made lower lows, the next move might be higher. If the market is to go down, the first thing it needs to do is break that line. But since we haven't broken through the line, we have to assume that the market is holding and could actually be ready to stage some type of a recovery attempt. If we take a look at the 30-minute chart for the Dow, something to keep in mind again, lower lows on the 30-minute chart, and we can see improving technicals on this line. So if the market holds coming into the new week, if that holds, then expect the market to bounce off that level and move higher. Otherwise, if we break through that as we begin the new week, then that's when we're gonna know for sure that there's more downside. But support is good. A break would suggest to expect lower prices. Let's take a look at the most bearish chart, and it is for the Dow Transports. So this is 3 years worth of monthly data for the Dow Transports, and you can see we broke through the lows on a monthly closing basis. Since then, we've been down about 9% for the month of December, and this is not entirely a surprise. Keep in mind, I had mentioned that if it moves below 50 on the month, it moves below 50, expect a big down month, and I would say 9% is huge. So that is consistent with our previous analysis. Keep in mind also, we are moving to fresh 3-year lows, which is a major no-no. So that's a major sell signal right there. And we can see that the MACDs are also moving to fresh lows on the 3-year time frame. So that's a major sell signal, major sell signal. So the Dow Transports are not setting up properly, and they might actually be suggesting that we should not be too surprised if the entire market complex follows this chart. If we take a look at the S&P 500, the level to watch there is if it can hold above or recapture the level above the recent weekly closing low, and the level to watch there is 2023.04. So anything below that would suggest that this weekly chart is pointing down and that we should not be too surprised to see lower prices. On the MACD for the S&P 500, as of the close of Friday, this is a sell signal. Why? Again, because we've moved above the zero line and back below it with uniform action. Because it's uniform action, more than likely the odds are that you're going to have to see lower prices. So this by itself is a major sell signal in my opinion. And that doesn't mean hour to hour the market has to go down every minute. It just means week to week. As long as this is the case, that the markets are trading below zero on the MACD, chances are that your markets are poised to go down. Before I conclude the video, let's take a look at long-term monthly chart here for the Dow. Actually for the Nasdaq. This is a long-term monthly chart for the Nasdaq going back to 1997. Want to show you some interesting lines. Number one, take note of the fact that if you take the highs here in 2000, touch the highs of 2007, extend that line, you get some interesting bits of information. While we traded above the blue line, that corresponds with this bullish period. Okay, now the same line has become resistance. I think that is a sell signal and a major sell signal for the market. It's a very simple line, but it's packed with information. All right. Another way of looking at this is to draw a line just at about 61.8. So let me draw a line with the RSI somewhere around there. And that line happens to be again at about 61.8 on the monthly chart. And you can see that that line gives us a lot of interesting information. We broke through here for the market highs there and a drop after that, major drop. Finally, in late 2007, the market broke through here. So this break in 2007 led to a major bear market. And we can see that now we are showing resistance. I think this by itself suggests that we should not be too surprised if we see a major bear market drop in the coming months. Now, compare this with the Dow Transports. We can see that the Dow Transports made a high early part of 1999, while the Nasdaq made its highs here in 2000. So the Dow Transports made a high many months before the Nasdaq. And if we draw a line at about 61.8 for the Dow Transports also, something like that, we can see that it gives us interesting areas of reference. Number one, coming into the highs of here, or this break here in 2008, took place at about 61.8. All right, and we had a nice run on the Dow Transports as they traded above 61.8 here during this period. The Dow Transports were actually leadership. Nice bull market. Ever since we broke through that, you can see that it's been down. And I think this is similar to this period here in 2000, 1999, 2000, where the Dow Transports peaked before the Nasdaq peaked sometime in March of 2000. So I think what I'm getting at here is it might be that the market is setting to go lower. And I want to show you some other interesting areas of reference. Take a look at this break on the transports. So this break here in the RSI support line took place here and a major bear market followed. Right now we are looking at another break in the RSI going back to the lows of 09. So this break and a move below 50 on the monthly RSI might suggest that this is the beginning of a major bear market drop. So the long-term picture, in my opinion, is not very encouraging for those looking for a bull market, just based on the fact that if you take a look at the Nasdaq right now, who knows, but the Nasdaq could be soon breaking this trend line. And if it does go on to break this trend line, be aware that might suggest a major drop. The last time it broke a major trend line was here during late 2007, and we know what happened in 2008. So Lots of things to consider here, but the key is if the market can hold current levels, one thing it needs to do is make sure it not to break this trend line. Because if it does, be aware you might be looking at a major drop for 2016, maybe even beyond. Eric Muadid, Muadid.com. Good luck, peace, and blessings. EACS. Woo! Yeah. Woo! Enjoy your weekend, guys. I am out. Woo!